Yeah, morning, Trace. A very interesting trading session playing through. Obviously, everyone's been focused on the moves that have been taking place in the bond market, the fragility we've been seeing there. But at the same time, there's been fairly good resilience across other asset classes. Now, if we look at the influence in bond markets, we can see a whole plethora of different factors playing through. We can start with the RBA minutes, which were hawkish relative to expectations. In Germany, we saw a better than expected ZEW survey. And in Japan, Bloomberg are reporting that potentially we could see the Bank of Japan upgrade its inflation forecast for this year to 3% and for next year up to 2% as well. If you add all those factors into probably the big marquee point, which was the better than expected US retail sales number, we saw the advance read up 70 basis points month on month. And then you have a look at the control group element, which was at 60 basis points. Consensus was below that point, and that control group element feeds more directly into the GDP calculation. But we are expecting now consumption numbers to be ratcheted up from sell-side economists as well on what we've been seeing on the retail sales number. But what we saw was a punchy move across fixed income, going to treasuries, and most of the selling taking place in sort of the belly of the curve. The 5-year treasury is up 16 basis points at the moment. We're sort of just trading around 487 at the moment, just testing those 4th of October highs. We have traded up to 489, but a material shift in the net change that we've been seeing there. We can see 2-year treasuries, which are all more influenced by near-term rate expectations and Fed expectations, up about 11-12 basis points at the moment, around 521. And if you go into the interest rate markets and swaps, you can go into sort of the back end of next year and can see December Fed Fund futures pricing about 11 basis points or so. We're currently trading around 56 basis points of cuts being priced in by that period of time. In SOFR 3-month forward rates, you can see a situation we're now pricing in 70 basis points of cuts for 24. That's a new high that we've been seeing in this cycle run. So rate cuts have been being priced out of the forward market as well. Now, the interesting situation is that fragility we've seen in the bond market hasn't necessarily resonated in FX markets. We can see actually the dollar index pretty flat on the day. Maybe that's a function that we have seen a decent sell-off in bunds as well. But generally speaking, the DXY's flat. We have seen a bit of buying in dollar yen. We can see dollar yen trading up to a high of 149.85. We're sort of coming back into those verbal intervention levels where we may see the headlines coming through that the Ministry of Finance are checking rates. We'll have to see. But we've seen the dollar move up against the MEX and also the Kiwi dollar. Other currencies are fairly firm on the day. Actually, euro dollars trade up to 106, or just shy of 106 on the trading session. In the equity markets, we can see the net change is a little bit lower. Tech has underperformed given these headlines that we've been seeing around sort of reprisals around companies that are potentially designing chips specifically for the Chinese market. But you've seen good gains coming through in energy stocks. The oil price is up a touch, nothing too substantial, but energy stocks have done quite well on the day. You can see material stocks doing quite nicely as well. And financials have been putting in some points. Bank of America have come out with some good earnings. The stocks had a good gain. They've beaten on trading revenues, also net interest income. Regional banks are putting in a good show today. You can see the KRE up nearly 2%. So we've got a whole raft of regional banks reporting in the near term as well, which will be interesting to watch going forward as well. Now, if we have a look at the trading session ahead, you can see a situation where we can have a whole raft of Fed speakers coming out. Christopher Waller's probably going to be the one that we're going to look out most closely for. John Williams also gets some attention, but we've got names like Barkin coming through. Of course, as I say, towards the back end of the week, Jerome Powell will be stepping up. In terms of the data front, China's going to be getting a focus today. We know that they've been injecting liquidity into markets, but we've got China GDP coming out. The market's expecting that to drop back to about 4.5%. Industrial production, retail sales and fixed asset investment will get a good look in as well. And in the bond market, we continue to watch what's happening in the auction side of things. There's going to be a 20-year bond auction, about $13 billion that the Treasury are looking to push out on a reopening there. So again, a big focus playing through. Now, the opening calls of the market at the moment are fairly flat, but we'll have to see how the markets trade then. Specifically, we're going to be watching this China market today.